So in this video, I want to drill down into one of these ASISA categories and show you some of the information that sits within there. We'll actually go into a fund in a later video, but for now, let's just have a look at one of these categories. And the South African multi-asset high equity category is a great one. Already on the screen, you can see 213 funds, 797 billion in assets under management, and it had a positive cash flow of 3.74 billion coming into this category. That's all the net. That's the net cash flow. So all the ins and outs to all the individual funds on an aggregate basis. So if we click on the information button, that will give us a certain amount of information on the ASISA category. Yeah, it's just telling you the data is to the 31st of January. It's only one ASISA category. There are 154 advisors, 143 mancos, 145 firms. All the funds, there's 213. We've mentioned the assets and cash flow, but I split that out into direct funds, fund of funds, and feeder funds. Now the feeder funds, you can see there's 0 there. The feeder funds are mainly on the global side. Also give you a Gini coefficient and a Herfindahl index. Now these two are indicators of how concentrated, in this case, this particular ASISA category is. So each ASISA category might have a different level of concentration. This one in particular, you'll see, has some very large funds which account for most of the assets in the category, therefore very high Gini coefficient. The closer it is to 1, the more concentrated the category is. So if we scroll down, here we get some asset class exposure, and the asset classes are split into local and global. There's cash, bond, property, equity, other, so it doesn't provide that on a look-through basis, and local CISs, so other collective investment schemes. And again, it's not giving you the breakdown of those into the other sort of asset classes, and the same thing on the global side. And then what I do is aggregate the local assets to give you an idea, and you can see the percentages here: 7.1% local cash, 17% local bonds, 2% local property, etc. So the addition of all the sort of local components, is 68%, which leaves the balance, and it doesn't quite tie up to 100%. And that's because some of the funds, the numbers may actually be incorrect. These funds have to submit the data, and you might find that some of the data is either not complete, or it's got errors, or something else. But anyway, that's a rough sort of split of the assets for the total category. Now, it is telling you here that it's asset weighted. In other words, it will look at the size of the fund and the equity component of that. So for a big fund, it would count a lot more than a small fund. Okay, so you're aggregating the equity across all of the funds. The rand number is being aggregated. You can go change that in the settings to make it equally weighted. I'll show you that by quickly clicking on the More tab there, going into settings, and here you'll be able to see, if you scroll down, sorry, where is it? Find it now. There we go. Asset allocation chart. Is it value weighted or equally weighted? If you wanted to, you could change that to equally weighted and just go back to that ASISA category. Let's go out and back in, and we'll see it's been updated to equally weighted. There we go, equally weighted. So about 28.6% global allocation. In other words, every fund in equally weighted, every fund counts the same. We just take the percentage allocation to the asset classes. We don't multiply it by the AUM of that particular fund. And I'll also give you the total equity. So the multi-asset high equity category, you can have a maximum of 75% equity, and you can see that allocation sitting close to 60%. You can also have a maximum allocation to foreign of 45%, and it's sitting at 28.6. So if we scroll down a little bit further, we get the assets under management split by fund, And here you can see that concentration I was talking about. Allan Gray, close to 22% of this category, followed by Coronation with about 13.5%, 91 Opportunity, Discovery Balanced, which is also managed by 91, PSG Wealth, 91 managed. Okay, so you've got about one fund almost accounting for 25%, and about 4 funds accounting for almost 50%. Then we've got the total assets under management over the past sort of 20 years. Now, this isn't every single fund that has existed over the last 20 years. It's just taking the funds that exist today and accumulating their assets under management for the last 20 years. So you've had a lot of funds that either closed down or merged or whatever that may not be in these numbers. Okay, so don't take this as being a representation of exactly how these assets for this category has grown. In fact, this category didn't even exist 20 years ago. The ASISA categories change over time. This chart here just shows you the returns over the previous 36 months, so 3 years, versus the TR of the fund, just to look for a relationship between those two variables. In other words, is it true that the more expensive funds give you the lowest returns and the least expensive funds give you the highest returns? And even though there is a relationship here, it's by no means accurate that the cheapest funds, typically the passive funds, are giving you the best returns. I mean, you've got a whole bunch of funds here that have given you much higher returns than these cheap funds, and you've got a cheap fund that's fairly low. I mean, it's probably below the average in terms of return, but it gives you an indication of this relationship. And you could see for another category that, let's take the general equity category, that relationship may not even exist. So there you go. It's pretty much a flat line, and R squared for the regression of 0 is pretty much telling you there is no relationship. So let's just go back there and see what other charts we've got here. Okay, just a histogram of the size of the funds, and here this is really a log scale. You can see it goes up in orders of magnitude, so below 10 million, below 100 million, below 1 billion, below 10 billion, and above 10 billion. And you can see here the number of funds in each of those bins, as well as the proportion. Okay, then you get what we call the quartile split, and obviously for the ASISA category you expect a quarter of the funds to be in each of the quartiles. This is performance over 1 month, 3 months, 6 months, all the way out to 20 years. And if you wanted to actually see more detail around, okay, which funds were 4th quartile or 1st quartile over different periods, you can actually click through on this, and you'll actually see what we call the smarty box, because of all the colors here, of every single fund over each of these periods, how it's performed. So remember, you've got an end date bias here. Everything's to the 31st of January, in this case 2023, so it's performance up until that date. So all of this performance could be impacted by recent performance. Okay, but you've got that for every single fund here. Okay, let's just go back. And then we've got risk and return plots, risk and return scatter plots for all these funds in this ASISA category. You can choose the term over which you want to see these plots. So over the past 36 months or over the past 60 months. Volatility typically calculated over 36 months. There's no reason that you have to use 36 months. You can use any period here. And on the bottom one, so this is volatility versus nominal return. On the bottom one, given the benchmark that you've chosen, so in this case CPI is chosen, but you could change it to the average, the category average. It's giving you the tracking risk, also known as the tracking error, versus the active return. Active return is the outperformance of, in this case, the average. If you had chosen some other benchmark like CPI, it would be the active return would be the outperformance of CPI. Okay, and you can see a whole bunch of sort of benchmarks that you can use here. These two relate to the category average and median, and these other ones are indices. And there's an ability to scroll all the way to the right and see many different ones that you could compare this to. So for example, equity funds you may want to compare against SWIX or cap SWIX. But for this case, let's just look at it against the average. And then if you wanted to, you could actually just play a little animation where you watch time from 20 years ago, how these funds have performed on a rolling 3-year basis or 36-month basis. So you move the window up 1 month at a time and you recalculate the return and the volatility over that 3-year window, and then you move it up one more time, one more month, so you can see it looping through the months all the way from 2005 when you had the first 3-year period all the way to 2023 when it ends. So you can see funds, volatility and returns, both nominal and active, changing all the time. Okay, so we've had a look at that. Let's look at the final graphs here. If I change this to median, I'll get a graph on the bottom there as well. So here we've got for the category average the average of all the funds in the category. I can see the monthly returns here, so greens being positives and reds being negative. In this case, active returns again against the category median in this case, but it could be whatever you chose here. If you wanted to compare it to cash, which is the Steffi call, that's a Steffi composite. I'll do a video covering all of those sort of indices. You could compare how the funds have done at a category aggregate level, so on average. Then I've got a box and whisker plot of both the TERs, so the total expense ratios of the funds. And again, you have to take this with a pinch of salt, because the data does rely on submission by the managers, of this data, as well as the AUMs, which we've seen in the histogram above. And here it just gives you some descriptive statistics of those, like, there's 213 funds, what's the average TR, what's the maximum TR and the minimum TR, etc., as well as for the AUM. So the biggest fund at 173 billion is that Alan Gray balance fund that we spoke about, whereas the smallest fund, if you look for the minimum at the bottom here, there's a fund of 1.3 million, which has either just been launched or is closing down. And then finally, you've got both in table form and in box and whisker plot, you've got a whole bunch of descriptive statistics, but now on fund returns for the category. So above it was on TRs and AUM, here it's on fund returns. So you've got things like the average, the maximum, the 95th percentile, the upper quartile, which would be the 75th percentile, the median, lower quartile, 5th percentile, the minimum, the range, the interquartile range, which is between the 25th and 75th, the cross-sectional volatility of the returns, so over 1 month or over 3 months of all the funds in aggregate, as well as the CPI number. So you could see, for example, over a 1-year period, the maximum return of any fund to January 2023 was 16.8%, and the minimum return was minus 8.8. So quite a big difference there. The range is 25.7%. Numbers in red, again, are negative. Numbers in green are positive. And you can see it graphically here with the worst fund at minus 8.8 and the best fund there being that 16.8% return. So that's basically, you've got this for every single ASISA category. You've got some additional functionality which I'll go into at a later stage in a different video. So if you just go back there, you can look for this information for any other ASISA category. I'll leave it there. Thanks, bye.